Hi, this is Matthew Cratter from Trader University. And today I want to talk about whether Bitcoin can actually reach $1,000,000 per Bitcoin. If you're interested in Bitcoin or other cryptos, be sure to hit that subscribe button. So right now, as I'm recording this, Bitcoin's trading at about 8,300 US dollars per Bitcoin. And what we're going to show here is a mathematical model that suggests that Bitcoin can hit much higher levels. So we're going to be looking at Plan B's stock to flow model. And before your eyes glaze over, this is one of the most important financial models that I've ever seen. So Bitcoin's currently at about $8,000 per Bitcoin. These are the targets suggested by this model, and we're going to do our own calculations soon. After the 2020 halving, which is when the Bitcoin miner reward gets cut in half, and as a result there'll be fewer Bitcoins produced. This model suggests Bitcoin will go up to 55,000. By 2024, 400,000, and by 2028, $3 million per Bitcoin. So I'll be taking a look at Plan B's model here. You can just Google Plan B, Bitcoin, Medium. I'll also put links to everything in the description notes below. And if you want to hear where I got these numbers from, 55K to 3 million per Bitcoin, those come from Plan B was interviewed by Stefan Livera on this podcast, which I'll also link to below. And he goes into a lot more detail than I'll be able to go into here. Now, what is Plan B's Bitcoin model based on? Basically, it is based on something called the stock to flow model. And we're going to talk about stock to flow. And I think the easiest way to think about it is just by thinking about gold. So what is stock? Stock is just the total inventory of a commodity. So the total stock of gold right now is about 185,000 metric tons. Now this is because gold has always been saved. It's very difficult to destroy, and you wouldn't want to destroy it because it's very valuable. Basically, this total gold stock is all the gold that has ever been mined over the history of humanity on planet Earth. About 185,000 metric tons. So that's the stock. What is the flow? Well, the flow is just the annual production of gold. And right now, the annual production of gold is about 3,000 metric tons per year. And this doesn't vary as much as you would think. Gold is very difficult to mine. It's very costly to mine. It's very rare on Earth. And this is one reason it has functioned as money for so long. So how do you calculate stock to flow for a commodity? Basically, you take the total stock divided by the total flow. In other words, you take the total inventories divided by the annual production. So if we do this with gold, we get a stock to flow of 62. Now, the really interesting thing about gold, unlike many commodities, so if, for example, the price of oil goes way up, as it did in 2007, 2008, if it goes up to $150 a barrel, what happens? Well, the production just is ramped up. Saudi Arabia is going to start pumping it. All the shale, all the frackers are going to start producing a lot more oil, and that will drive the price back down. So the production of oil is fairly flexible. You can turn the taps on and off, especially OPEC can. Now, what happens if the price of gold goes up a lot? Well, gold is very difficult to mine, and even if the price of gold goes up a lot, it's very difficult to increase this annual production number of 3,000 metric tons. So as a result, gold is able to store value. It functions as a store of value, and this is why it's been treated as money in so many cultures and for so long. Now, obviously, this could change in the future if Elon Musk goes to a comet or Jeff Bezos goes to a comet and brings a lot of gold back to Earth. That messes everything up. But for now, gold is not just rare, but it's difficult to produce more of it in response to higher prices. So that's the stock to flow of gold. Now, if we look at some other stock to flow numbers, we can see, this is from Plan B's article here, gold, as we calculate, has a stock to flow of about 62. Silver, which is sort of an inferior form of money, it used to be a form of money and was really displaced by gold in the 19th century. Silver has a stock to flow of 22. So it has some monetary function, but it's much easier to produce more silver in response to a higher price of silver than it is for gold. Now, palladium, platinum, obviously very valuable metals. very rare as well. But they have much lower stock to flows. You can see palladium about 1.1, platinum 0.4. As a result, these don't really function as money, because what happens if they begin to function as money and they become very valuable, what happens? The miners just produce a lot more palladium and platinum. So this is one of the real keys to understanding money and store of value, is to look at the scarcity of a commodity or an asset. And one way of measuring the scarcity is stock to flow. The higher the stock to flow number, the higher the value and the better it functions as a store of value, because the commodity producers can't just come in and flood the market with more. So for example, copper is another example of a metal that has a very low stock to flow. If the price of copper goes up, all the copper mines increase their production. It's fairly easy to do. Copper is very common, and they will dump all their copper in the market and drive prices back. A lot of commodities are mean reverting for this reason. Now let's look at digital gold, or Bitcoin. The nice thing about Bitcoin is it's even more limited than gold. We don't really know what future supplies of gold will be if we bring back gold from the moon or a comet or a meteorite or something like that. But we do know the future of Bitcoin. There will only be 21 million Bitcoin ever created. It's a very fixed supply, and probably 1 million of those are lost forever. Satoshi's Bitcoin, there's probably another 1-2 million that have been lost just because people forget their private keys. But for the purposes of this, we're going to assume that there's 21 million Bitcoin. If there's actually fewer, then it makes them even more scarce and more valuable. So we calculated the stock to flow of gold at 62. We just took the total inventories divided by the annual production, got 62. Very nice number. Now let's do it for Bitcoin. If you go to, this is from the website bitcoinblockhalf.com. I'll put links to this. There are currently, let's look at the current inventory of Bitcoin. Total Bitcoins in circulation, 18,176,000. Again, some of these are probably lost forever, but for the purposes of this demonstration, let's just assume that they're all available and not lost or locked up. So the stock in this case, the current stock, would be about 18 million. And how many Bitcoin are generated each year? How many are mined? What's the annual production of new Bitcoin? Well, they're 1,800 per day. So we just multiplied this number by 365 to get the flow. So here's the stock, about 18 million. The flow is just 1,800 Bitcoins per day, roughly. This is a rough calculation. Again, Bitcoins are mined in blocks, and they don't always course. Sometimes they're mined more quickly, sometimes less quickly. But for the purposes of this, 1,800 mined per day times 365. So the stock to flow of Bitcoin right now is 28, which you can see it's already above where silver is. Silver was at 22, but it's not quite as high as where gold is at 62. So what's happening in May of 2020, the reward to Bitcoin miners is going to be cut in half. And this means that the annual production, as well as the daily production, obviously, of Bitcoin is going to be cut in half. So what happens if we just mine 900 Bitcoin per day, starting in whenever the halving is, roughly mid-May 2020, where there are only going to be 900 Bitcoin produced per day, times 365 days. This will be the new annual production down here in the denominator. For the numerator, I just rounded up a little bit. Obviously, there are more Bitcoins being produced every day. But if the current Bitcoin, if they're currently about 18 million, I just use 19 million. You can use whatever number you want. You can even use 21 million. But let's say 19 million. It's probably going to be a little less than that in May 2020. But as we get into 2021 and 2022, we'll begin to approach this number. Well, what happens because of this halving? Well, the stock to flow of Bitcoin goes up to 58. Now you can see that that's very close to gold, what we calculate gold to be about 62. So after this halving, Bitcoin is going to be almost as rare as gold. And unlike gold, we know that there will never be more Bitcoin produced. So what Plan B did, who wrote these articles on Medium, very clever quant guy, what he did is he noticed that if you take the natural log, in other words, log to the base of E, the natural log of Bitcoin prices and the natural log of Bitcoin stock to flow, you end up with you end up with a very nice linear curve. And, well, I can show you that later. But basically, the formula he uses is it turns out that you can model this curve, and the way Bitcoin has behaved in the past, at least, is that the current Bitcoin price is equal to 0.4 times stock to flow of Bitcoin to the third power raised to the third. So this is a way of calculating future Bitcoin prices based on future Bitcoin scarcity as measured by stock to flow. So let's see what happens. We calculate that after the May 2020 halving, the price, the stock to flow of Bitcoin, the relative scarcity, is going to move up to 58. So if we plug 58 into this formula, we plug 58 in as the stock to flow, we come up with a price of about $78,000 for Bitcoin. Again, currently Bitcoin is just at 8,000. So this is almost a 10x return. So this would be after the May 2020 halving. Now, obviously, the price can begin to anticipate the model and move there more quickly. Maybe there's a lag. This remains to be seen. Now, what happens when after a couple more halvings? So we have this halving in 2020. We have when the number of Bitcoin per day produced per day is going to go down to 900. Then we have the 2024 halving, when the number of Bitcoin is going to be reduced. Daily Bitcoin production is going to be reduced to 450 Bitcoin per day, because again, the reward for the miners is going to be cut in half. And then in 2028, the number of Bitcoin produced per day is just going to be 225. So let's see what sort of stock to flow we end up with. If we take the final number of Bitcoin, 21 million, that's the most Bitcoin there can ever be. Again, it's probably a lower number than this. It's probably closer to, if Satoshi's, the inventor of Bitcoin, if his coins are lost, that takes us down to 20 million. People estimate there's another 20 million lost. So this numerator should probably be even smaller, which will increase the number. But let's just use the biggest number, 21 million. So basically what we're doing here is we're calculating stock to flow in the year 2028. Again, only 225 Bitcoin are going to be produced per day, 365 days. So this will be the annual production down here in the denominator. Here, this is the current inventory. We come up with a stock to flow of 255. This is, in other words, the rarest asset that the world has ever seen. We've never seen a stock to flow this high. Gold has the highest stock to flow of anything that we've ever seen. And again, it's at 62. Now, what happens if we take this stock to flow from the future and we stick it into this formula to calculate the current, the future price of Bitcoin in 2028? So we use a stock to flow of 255. 255 to the third times 0.4 gives us a value per Bitcoin of 6.6 million. Now this is obviously, this seems crazy. This is what the model's predicting. Now, one of the things we know about financial models is once they are released, they should begin to get priced in. So what has happened historically? Well, the last Bitcoin halving that we had took place in July of 2016. So if we could go look at a chart of Bitcoin, July of 2016 was roughly, looks like the price of Bitcoin was around, call it 600, somewhere between 500 and 700, but called $600 per Bitcoin. After the last halving, when the Bitcoin mining reward was cut in half, there was a lag. The price began to move up in 2016, but then if you remember, 2017 was a crazy year when it went all the way up to 20,000. So what historically has happened is that there's been a lag, and the same thing happened in 2012. There was at that halving, Bitcoin was priced around 11, and a year later, it had basically gone up 100x. It had moved up to 1,100. So now something is what's interesting about this is this model, Plan B's stock to flow model, is really being discussed in the Bitcoin community and all over Bitcoin and crypto Twitter. hasn't been really covered that much by the general public. So the suggestion is this has not been priced in yet. But what will happen when this is discovered, especially as Bitcoin begins to hit new highs, is there's going to be a mad rush to price in these future prices. Because if Bitcoin is going to be at 6 million in 2028, or even if it's going to be at, if we look at those first numbers, if it's going to be at 400,000 in 2024, it really should not be trading right now at 8,000 something. So either there's a problem with the model, maybe this model's going to break down for some reason that we can't foresee. But if the model is correct, and it has been a very good predictor, you can go into Plan B's article and you can take a look at basically how well it has predicted the price of Bitcoin. Now, Bitcoin will sometimes go above. It'll become overbought and go above the predicted value. It'll go below the predicted value, but it sort of stays in this band. And as a result, if this model is correct, and the nice thing about it is we do know what future Bitcoin production is going to be because we know it's basically built into the code. But if Bitcoin is headed to 400,000 in 2024 and 3 million to, what did we calculate, 6 million by 2028, this should begin to get priced in. So maybe Bitcoin should be trading in 2020 or 2021, maybe Bitcoin should be trading at like 100K or so, which would be more than a 10x return from here as this begins to get priced in. Now, I want to conclude with one last point. A lot of people will say, well, this is an interesting correlation, but correlation does not mean causation. And this has been one of the critiques of the article, but what has come out lately is that the value of stock to flow, it turns out, is co-integrated with the price of Bitcoin. And what this means is that these are variables that are actually related in the real world. I'll link to this article, and which talks about it. It gets pretty technical, and I'm not a statistician, but basically it shows that stock to flow and Bitcoin are co-integrated, and as a result, this model is, I hesitate to say completely watertight, but basically as watertight as you can get. I've never seen something like this in the financial world. Normally there's a lot more uncertainty, and to get a very nice pricing like this is unheard of. Finally, I want to end this video by referring you to a very interesting website by Digitalic. I'll also put this in the links below. And this has a nice chart where you can see the stock to flow and the price over time, and where Bitcoin should be trading. You can see here he's got it above $1 million by 2024. So, and this goes a little bit more into halvings, stock to flow, and talks in a little bit more depth about what we've been talking about. So that's the conclusion. It really looks like Bitcoin can reach 1 million, and that there's a decent chance it can go much higher than that. And we didn't even talk about the 2032 halving. You begin to get some crazy numbers like 10 million per Bitcoin. Let me know what you think of this video. I know it's a little bit more technical than I normally do, but I know a lot of you asked for it. Drop your comments in the section below, and be sure to hit that subscribe and like button if you haven't done so already. Thanks a lot for listening. I'll see you in the next video.